Every day we hear companies spending millions on advertising, sometimes more than they spend as salaries to employees. But this video is not about cost benefit calculations, nor is it about rational decisions. It's not even about whether companies or their managements understand advertising. This is about the next new thing, annual reports, and why you must watch out for the ones that sound more as an advertisement than a statement of past performance. Many reports are rushed to investors with the same first to market mentality that propelled the launch of the respective companies only the year before. Others are generally collector's items because they are either the first or the once and only kind of reports. You might find such annual reports on auction someday, with future bids reaching current market cap levels if inflation rises even higher. So here are 8 things you must watch out for in annual reports, as these might hint at a cover up of poor performance, poor decision making, and a poor vision. Number 1. Watch out for annual reports that talk about the bright future in a new century kind of stuff, or ones that focus too much on mega trends than the micro upheaval that's happening inside the company. Watch out for the flashy, bulky annual reports whose cost of designing and printing might be more than the fees the company pays to its investor relations agency for a whole year's work. Number 3. Avoid the ones that contain reams and reams of pages on boardroom pictures, abstract art, and chairman close-ups. Number 4. Don't believe an annual report that shows senior executives tie-less and wearing jeans in the pictures. At the same time, don't take on face value the reports that try to show a 25-year-old guy of good times look older and more mature. Number 5. Watch out for annual reports where the chairman or management delivers a nice sounding explanation of the company's stock's 200% run in the past 1 year, because there can't be any explanation for a stock to double or treble in a year except stock market's madness. Number 6. Look out for annual reports where the chairman discusses the lack of profits or weak cash flows by simply saying that it's a new, innovative, strategic, or synergistic business model, and is not able to explain where the real profitability is going to come from and when. Point number 7. Watch out for annual reports where the chairman lays the blame for his company's poor performance on a black swan event like the global financial crisis or an economic downtrend. Ask him what is he going to do to avoid such an impact on the company in the future. Point number 8. Discard annual reports that use too much of search terms as VCs, angels, eyeballs, diversification, backward integration, forward integration, synergy. Especially take note of the words like mergers and acquisitions, going global, or when an annual report says something like a risk neutral business model. So these were the 8 different kind of things you must watch out in annual reports that you receive, and it helps a lot in terms of doing a further analysis on whether the company is really worth investing or not. Let's take a look at some sample Indian annual reports to just really gauge from the face of it whether there are some hidden cockroaches inside the business, or whether the management is really serious about doing business actually. The first report that I'm covering today is that of Temptation Foods, and we discussed this report in a recent post where we saw how the company has used vivid images to really cover up the bad financial situation it was in. So let's just run through the annual report of Temptation Foods again and see what you could have found out were you to read this report as a level-headed, sensible investor in 2008-9 when the report actually came out. So if you go through the index of contents, you'll get some hints about what the management is intending to do. See the headlines, the temptation of sites. You've nowhere you can see a letter from the chairman here till here where you're seeing a question and answers, but you're seeing some things like temptation of sight, the temptation of taste, the temptation of touch, all these kind of use of imaginary or imaginary words that really make a fool out of people who are really so enamored by such annual reports that they really lose out the bigger picture. So here is the annual report, and I'm just showcasing this again. I was particularly taken back by a story that the company has talked about of a Greek goddess. I'm not sure what a story of a Greek goddess and her beauty is doing in an annual report, which is really made to discuss serious stuff. Let's straight away go to its financial statements and see what are the things that the company must have covered up by using such vivid images. See the amount of debt that the company, straight away you can see the debt on the balance sheet has really increased by 400 times. This is massive, and you cannot really cover up this kind of a crime until unless you really divert the investor's attention to something which is not important. So see the kind of mess the company has made of its balance sheet. Not just that, see the kind of increase in inventories. Inventories have doubled in a year. In a year where sales also double, of course, the company was growing, but see the kind of impact it was seeing on its balance sheet. The sundry debtors, or the people, the company's clients who are yet to pay the company, that figure has increased by almost 4 times. So the balance sheet has been made a mess of. And if you were to really take a look at the more important cash flow statements, the cash flow has again seen a negative figure. The company has really used up cash after operating activities, and you can see a negative figure here. So not a really good picture. Another interesting thing which I came across was use of quotes on temptation. I'm not sure what are these quotes doing on an annual report. Again, sorts of vividness. Let's go. Let's take a look at the last page, and you can see a full eaten apple. Probably this is the case of a shareholder who really invested in the stock, because the stock really, SEBI had actually banned the trading in the stock last year because of some insider trading. So that was temptation foods for you. Let's go to another annual report which has used vividness to really divert investors' attention, and that is of Suzlon. Another extremely poor performer and a value destroyer of the past few years. And Suzlon has been a fast-growing company, had been a fast-growing company in the past, but the kind of steps that they took in that aggressiveness really caused the blunders that the company made. And let's have a look at the company's annual report a bit. This is a page on vision, and the only thing that you can see is the company's vision of its future headquarters in Pune. So that is a company which is into engineering, not an IT company, but it's an engineering company, and looking at such lavish headquarters. I'm not sure what was the management doing, spending so much money on, wasting so much of shareholders' money on building a lavish, fancy office, corporate office. Another picture, you can see some cowboys on a company's annual report. Funny things happen. Some good things which if an investor would have probed further wouldn't have been such good things. So you see the turnover rising, you see the profit surging, net worth, everything is rising, but this should not really impress you. You still need to go and read into the financial statements and look at what the company is doing to grow such fast. So let's have a look at some more pages. This is like the company's acquired facility in China. So it is actually a greenfield facility. So the company was expanding rapidly fast, and it acquired companies outside India. This image is of a company's manufacturing premises. So for one investor, this can be like such amazing products manufactured by the company. For another investor, this could be like an inventory which is lying unsold. So again, it depends on what you are thinking and what you're looking at. This is again a Belgium facility. Nice pictures, vivid pictures to really divert attention of investors, and you should really watch out for. Look at the company's annual report, the financial statement, balance sheet, and you see the reason why the company was trying to cover up. See the amount of debt again on the balance sheet. See the loan funds figure. From 450 amount of rupees in crore, it has really moved to 5,000, almost 200 crore, which is like more than 10 times jump. So this is another important point for the company, which investors might have overlooked because they were really captured by the company's annual report. And I just want to take you through the letter from the chairman. And the interesting part is that the chairman letter does not talk about the company till about 3 pages. So the first few pages are all like over the top kind of things, where the management is talking about times being redefined across the globe, and boundaries, geographies, new geographies having become potential markets, and how things have changed, how things have improved in our lives, and what is the tipping point in history, and all those kind of fancy words. And not till the third or fourth page there where you can really find what the company is actually doing. And again, it's all a blah blah kind of a picture where the company acquired things, and the kind of money it's spending on R&D, not really talking about what the company is actually doing then in terms of the performance, because that is what the investor is really interested into, and what are the key drivers that or the challenges the company is going to face in the future. So that was Suzlon's FI 07 annual report. Coming to Suzlon's FI 12 annual report, you see how the things have moved. If you were a sensible investor then and you really looked at Suzlon with open eyes, you could have sensed the kind of trouble the company was getting into. Now see the kind of kind of debt that the company has built up. That time the debt equity was still almost in manageable levels. Now if you see the long-term borrowings, these are like much more than your total equity. So of course, if you see the starting of the annual report, the pictures are still vivid, and the management is still trying to possibly take away attention from the investors. And here's a full page bust of Mr. Tulsi Tanti, the chairman, the founder. So avoid the kind of vividness that these annual reports show you. One annual report again, Tata Motors. You know a lot about the company. This company doesn't need an advertising through its annual report, and this is the kind of annual reports that really interest me, and they should interest investors, where the management straight away comes to the point. There's a chairman statement by Mr. Ratan Tata, but Ratan Tata does not need to appear in full page kind of photograph talking about his company. He's really talking about his business, the challenges, the different segments, and this seems like a boring annual report. But for a sensible long-term investor, this is the kind of annual report that you must be really excited about and look forward to. This annual report does not talk about the blame game, or it does not talk about the flashy things. Of course, Tatas are guilty of doing something which was not right in terms of acquiring, making expensive acquisitions. But they were full blame that Ratan Tata had taken up later on the acquisitions, and things have actually are turning out well for the company, so to say. So I'll still put a lot of faith on, say, Ratan Tata, who's going through a problem with his company, than to Mr. Tulsi Tanti, who's like more flashy kind of a guy, and very growth oriented, very aggressive. So that's the reason we discussed in yesterday's post, last post, that looking at simple businesses and looking at the management's intentions plays a lot of important role in the kind of annual reports you see and what ultimately you get out of it. One final sample. I'm not sure if you can imagine what this annual report is like, but it seems like a boring annual report. And let me tell you, it's an annual report of Page Industries, which is the manufacturer of jockey brand of innerwear. Fast growing company, but very sensible management. They have not really overtly stretched their balance sheet, but you see the kind of cover page. This is the cover page for Page Industries. Another boring kind of a annual report, but this is something that you must be looking out for as an investor. So this was another video on the kind of annual reports or the kind of indications that annual reports can give you as an investor on the face of it. You of course need to still go and read inside what lies in terms of the balance sheet, the profit and loss, the cash flow statements, but a lot of hints come from, and as I discussed, the 8 points that you need to watch out for when you are looking at annual reports. They should not be flashy, they should not be bulky. The management should not be playing the blame game and laying every blame on something called as a black swan, and they should not really talk a lot about diversifications. And companies which are really going are targeting growth by any means, and they are targeting to advertise through their annual reports. I think it's very important that you should really shun these companies. Of course, after reading the balance sheet and financial statements, but most often than not, you'll find some cockroaches in those kind of balance sheets and annual reports, because these are the kind of things that the companies try to cover up. So that's the end of this post. From the next post onwards, I'll try to start working on analyzing financial statements. So thank you for listening and have a nice day.